everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M by 1M, as you know, is the first and only global virtual accelerator for technology startups in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. In support of that mission, we do these free mentoring roundtables week after week after week. We started way back when, in the fall of 2008, and this is the 522nd session. Over 150,000 people have participated. It's been a fascinating experience working with people from all around the world, literally all around the world. And you can get a flavor of it. Every single event that we've done is recorded and available on our YouTube channel. So if you go to 1M1M Roundtables, you'll find every single one of them. If you have time, you can listen and enjoy. On Twitter, we're at 1M1M and at Romana. Hashtag for today is 1M1M. And then we have scheduled programming first, but we will open up the line for you to participate and converse a little bit later. You can do that through your WebEx computer audio, or you can dial into the audio bridge. Either way is fine. It is a roundtable, not a broadcast. We want to hear from you. We want to get to know you. We will start today's session with Laurel Touby, Managing Director of Supernode Ventures. Laurel has been here before. We're delighted to welcome you back, Laurel. Thank you for coming, and look forward to catching up.
So great to see you again, Sarmana. By the way, the last name is Touby.
Touby.
Yeah.
Touby. How has COVID been? How have you been, and how has the business environment for you been?
Great. It started out pretty rough, like everybody. We were all, we didn't know what to expect, and in terms of working, it was very demotivating. But then over time, we realized, hey, the early bird gets the worm. If we don't get out there and hustle and get into great deals, we're never going to be successful as a venture fund. So we started speeding up our activity probably around June, and we're almost done allocating our first fund.
Okay, all right. So let's talk about that. What size fund are you about to finish allocating? What kind of investment pieces have you worked with over the last year, and what are you investing in? What are the trends that you are seeing?
Sure. So it's a small fund. It's a nano fund, I like to say. It's about a $5 million fund. We're doing 35 to 40 investments into pre-seed and seed stage companies, reserving a lot of the capital for follow-ons into the best companies that we've invested in so far. And we've been deploying the capital for about 3 years now. So we're right on pace to where we want to be. The sectors we focus on are early stage, B2B, fintech, enterprise, really the guts of an organization's software and tech. So we love software across industries. We're really sector agnostic.
Okay. And geography, New York?
A lot in New York, because that's where our power base is. And then we're also doing, we have a smattering in other places. We seem to see a lot of great companies in LATAM, actually. So we've gotten into a few companies down there. You can go to our site, supernode.vc, and see our portfolio there. We have all of our most of our companies there. But yeah, we're not stuck in any one geography or location. It's really important for a venture fund we think, to be generalist and to be lightweight and nimble, because so much is happening. Tech is revolutionizing so many industries. And before you know it, there's a new tech stack to be concerned with. So for example, years ago, people were talking about clean tech and VR. And then, a lot of people lost their shirts who started funds that were just focused on clean tech and VR because, the tides changed and institutional investors didn't want to follow on into the next rounds. And so a lot of companies went under because of that. And so now, the generalist fund, we think, is where it's at.
Well, we talk to investors constantly. The theme that is ubiquitous is AI investing. Everybody is looking for AI deals, and especially in B2B, everybody is looking for some form of AI and real AI, not just foo-foo AI, real AI. Then, of course, I think there are specialists who are doing fintech with specific focus. So let's actually talk about what companies in your portfolio are you particularly excited about. Maybe take one or two examples, maybe one or two examples from the US, and then maybe one from Latin America. Latin America is always interesting. It's a different, we have had quite a few Latin American investors here as well.
Yeah. Well, I'm actually, I'm not partial to any one company because I'm like a mother. I'm a mother duck. I have all these beautiful children and I love them all. But if you want, we can talk about one that might be exiting soon. We're very excited to, we'll have a possible exit in Braze.com, which is a marketing technology company. It's a mobile marketing automation. They help enterprise corporations communicate through various mobile channels. So, for example, if you get push notifications or messaging through your apps, the chances are high that Braze is powering those mobile communications. So that's one we're excited about. Another one that's very exciting, it may not exit soon, it's coming to market soon, is called New Age Meats, which is cellular agriculture. This is a company where they create meat out of cells, and then they mix them with plant-based, product in order to create a pork sausage. So they've been working on that for a couple of years, and it's the future, right? I mean, plant-based and lab-grown pork and other proteins is the future. I mean, everybody, when we look 5 to 10 years ahead, when we look back on this time period, we'll say, really, were we slaughtering animals? Why would we do that? Why would we grow animals for slaughter? It's crazy. So it's really, so Ramana, it's hard to remember, it's hard to realize how much a part of the future we are building right now with all these technologies and all these founders. We are in one of the most exciting times in history.
When I look back on when I started in the technology industry, it was the mid-90s, and it was the beginning of the internet, and there was still stuff like dial-up internet and things like that. And now, of course, a lot of founders have never experienced a non-internet life. So these are, young people, digital natives, and many of them have not really experienced adult life without a smartphone. So it's a very different demographic. And so yes, you're absolutely right that one day we're going to look back and wonder why we were slaughtering animals. Absolutely.
Yeah.
Okay.
And so,
what about Latin America? Let's talk about a story from Latin America.
Well, Latin America, remember, is not just one place, it's many places, and it's extremely different in each country, right? And the dynamics, the politics, the markets themselves are extremely differentiated. So you have to be careful when you're investing overseas, especially in Latin America, because you don't know, unless you're from there, you're not going to know the dynamics. You're not going to understand it. So what we've done is we've thought really hard about different markets and what is there already and what's not, right? That we've already built here. So for example, everything's fintech in LATAM, for example. Any type of company you invest in could transform itself into a fintech company because moving money is a very important.
They're leapfrogging the financial. They're actually leapfrogging fintech and retail to e-commerce. Yeah, absolutely.
Yeah. So we invested in one called Habi, Habi, in Colombia, very early company, and they're doing the open door for Colombia, and they hope to spread that. And Open Door, as you know, here buys properties and fixes them up and resells them. And so that's what they started to do there. And the reason we invested in that company was, we had high confidence in the founders, right? For us, the most important thing is meeting really great founders that also have a great syndicate around them. Because if they can't get their second or third round, they're out, no matter how good they are. So, those are two big factors in LATAM that we're looking for is, they have to be extremely connected. We really favor founders who've gone to schools in the US, who are taking models that they saw work in the US and applying them to LATAM, and that they're very connected in LATAM so that they know that they can actually get second and third rounds. I find it interesting that Latin American investors are letting these companies slip through their hands. They are not going into these companies early enough. They're waiting. They're very cautious. So we're able, US venture capital is able to go in there and snatch up these early companies before the local investors are, which is crazy to me. And it's all because they're too conservative.
Not crazy, Laurel. It's not crazy at all, actually. I've watched the Indian ecosystem mature, which is now going gangbusters, absolutely. But early on, people were very, very afraid to go early. Early stage, the seed, pre-seed investment in India was very difficult. It's changed, it's changing. But I think, when people don't have a lot of experience in the ecosystem, they want to see proof points. And to see proof points, you have to basically let your startups bootstrap the early stage, and then you come in after there is proof points. And that's how a lot of businesses got built. And I've talked to investors in Brazil and Argentina as well, and they have a bit of that tendency, is that they want people to bootstrap up to a point and then start coming in a little bit later. However, one of the big successes of Latin America, one of the biggest successes of Latin America is Mercado Libre, and they were my clients when I was consulting many years ago. And I've known them for a long time. That company was a team from Stanford, so they knew how to raise venture capital right away, and they managed to, it was in fact quite early. The early stage of Mercado Libre was rather difficult because the market was not developing. It took much longer to develop. So they managed to survive that early stage period without going under, because of their expertise with navigating the venture capital universe. So your point is well taken. If the founders don't know how to navigate and they cannot bootstrap, then they're not going to make it.
Yes, absolutely. And the other company that I'm super excited about in LATAM is in Mexico. It's called Credit Justo, and they do small business lending. And it was just such a logical thing to invest in. I mean, I couldn't believe that other investors weren't as excited about it as I was. So I led the deal, and that was my first time leading a round into a company. But I had high confidence in these founders. They were schooled at Brown University and another university here in the US. They were from LATAM or Mexico. They had tremendous connections down there. And they also had a vision, right? And their vision was that they wanted to bring the type of banking we have here to Mexico. It seems logical. It's an enormous market. There's lots of founders and small businesses who need banking services, and the big banks weren't providing it for them. They were providing it, but at a high cost, slow, cumbersome. And they said, hey, we are lightweight. We're online. We're gonna, get our customers online first, and we're going to have unique underwriting. But all of this stuff had been done in the US. So I thought, this can happen. Let's do it. Let's back these guys. And their most recent round was a Series B backed by led by 0.72 and Goldman. So they're way off to the races. Fantastic company. That's called Crede Justo. So I really like Latam when you meet the right mix of founders and investors, of course.
Yeah. Okay. All right. And in your deal flow right now, what are you seeing trend-wise? What's standing out in this post-COVID world? What are the themes?
There are, you probably have noticed this as well. There are a lot of technologies that are being launched in order to create meeting spaces for people that aren't Zoom.
Remote work is a trend.
Yeah, all kinds of virtual rooms and virtual parties and events, management software. We're seeing a lot of that. We didn't place a bet there because we just saw it as way oversaturated in a short amount of time, and also we wondered what's going to happen when people want to meet in real life again to these things. Of course, there's some interesting social communities. I've been playing around a lot on Clubhouse. I did not see that one, as a deal. I've been playing it around with it as an early adopter, though. It's been really a unique experience. So if you haven't tried Clubhouse, I would definitely try that out for some events.
Why do you like Clubhouse?
Because it's like radio. You and I grew up with radio, right? Talk radio. And nobody's replaced talk radio yet with any technology, so this is the first time that I see a path towards replacing talk radio with something really unique and cutting edge. It's all audio, and you log onto the platform, and then you can hear total strangers talking about different topics. And so they have rooms. So each room has a topic, or it could be an open topic room. Some of the rooms are silent rooms where you just go and you sit silently with other people and you do your work. It's crazy. It's so out there. Whatever you think of, you can create on Clubhouse. It's very early, and it's very exciting as a result because anything could happen there.
Cool. All right. Well, good to hear what you're seeing, what you're doing, and let's stay in touch. And there is a company that we are incubating right now. We haven't yet decided to go out to raise money for this, but it's a very, very talented founder. If we decide to take that out soon, I will send him to you.
Oh, fantastic. We would love to hear about him. Thank you.
All right, take care. Bye.
All right, bye. Nice to see you.
Nice to see you. Okay, folks, entrepreneur pitch section. Remember, this is a safe working session. No need to be nervous, no need to be defensive. We are on your side. If you disagree, that's fine. It's your venture. You will do what you want to do. We are going to go to George Kajaia.
That's right. Hello, Stramana. Yes, it's me, and hello, everyone.
And this is my first slide?
Yes. No, it's not first slide. Yes, this is the first slide, but I'm not going to follow these pages, slides. And I just say that this project is about mainly about investment and the problems today's giant companies have. I see those problems, and I want to talk about this. And I have a project. I've been working on this project since 2003. It's long in Silicon Valley, in Palo Alto, and now in Georgia. And this is about what I see, the problems that they generated. They have monetization segment of their companies. For example, take a Google. I think that what Google generates the money from users, from the advertisement, they have to share this money to regular users who clicks their links, advertisement links on Google's web pages. Because of these clicks, Google makes money. and this money belongs partially to the people. Same belongs to the Facebook and any other advertisement programs. This is the difference what I see, and this money should be shared with users, and users have to spend this money for crowdfunding projects. There are other aspects that search engine, social networking, e-commerce websites, double-sided marketplaces, everything is connected to each other. Yes.
George, I think it's hard for us to follow what you're trying to do. Yes, we understand that Google makes money off content, and the people who are producing that content are not making any money, and the money should be shared,
yes.
blah, blah, blah. But how do you propose to solve that?
The thing is that when user clicks of it's a lot of segments of that. It's very easy to solve. This money belongs partially to us. Google generates 20 billion a year. The profit, 10 billion belongs to users.
But what are you trying to build, George? What are you trying to build? Are you trying to build a new social network? Are you trying to build a new search engine?
I'll tell you. I was going to say this. You interrupted me. I'm telling you, saying this again, that search engines, social networking website, double-sided marketplaces, e-commerce websites, all are the same organism. They have to be under one platform. And I call this the Web 3.0 platform. It's the next future generation. This is how it's supposed to be. The future belongs that it's about that if platform generates money for users on users' behalf. This is the main problem. No platform solves this problem. I have solution about this, and I'm talking about this. This is everything all together, interconnected to each other. This is not separately web search or separately social networking, or everything has to be connected. For example, in Instagram, you see the shops, Instagram shop, or social networking connection, or something like that, or Reels. These are all different segments connected to each other. They are connected. It's a good application. It's a good platform, everything, but it's not enough. Something more needs to be done, and it's a little bit difficult to describe everything all together, how they are connected to each other. But this is this is Web 3.0 solution. We have now Web 2.0. This is our stage, and what I'm talking about is the future of the internet, how it gets to be. Also about e-commerce, the difference what's gonna be. Before I purchase anything on the platform, I want to get paid for viewing their products before purchasing. No one does this. And I want to say that this is necessary to be done. And this needs to be thought about this problem. And there are other segments of the problem, and I can talk about these too. And this is all about this.
So George,
yes.
What is this? Is this a concept or is it a business? Are you already in business?
I've been working from 2003 about this. I started from small. I wanted a social networking website for photographers, but it developed so much, it evolved so much that I thought that I saw the problems what other the big platforms had, and I closed that project. And I want to start everything from the beginning, from the start. So I have experience. I've done something. I've been working in Silicon Valley long time ago, and I want to continue from the beginning again. So this is the business. This is the startup that I want to achieve.
What I don't see here is how you are going to get started. You're asking for capital. What are you going to do with capital? People don't write checks for you to start something. They fund businesses that are already validated and that are already going.
The first thing I want investors to understand that what problems exist with big companies. They don't see that. And I want to show them this is the problem, what they have. And then $100,000, there is a segment. I said that different segments are connected to each other. And we start with social networking. And then we add different segments of the business.
So let me be very specific. If you're trying to start with social networking, you need to show a social network that already has 1 million users or more. And the reason why it's growing virally for people to invest in a social network at this stage of the game. We are in 2021 March. Too much is going on, too much has happened. These days investors don't invest in a random social network unless it is virally spreading like wildfire. So your only option, if that's what you want to do, your only option is to bootstrap your way to something where you can show that this thing is growing like crazy.
Yeah,
if you can't do that, nobody's going to write a penny of check.
I understand. I've been there and I know how it works. And I'm talking about that it's different. And that's what I'm saying. And I'm talking that I want investors to understand how different my project is than existing ones. And it's totally different. And it needs to be explained. The double-sided marketplaces right now exist separately. Imagine the double-sided market like Uber or Airbnb. They need to be connected to each other, and the users of these platforms needs to have social connection between themselves. No one does this. Right now, separately.
I don't agree with that statement. I don't think they need to be connected to each other. I don't believe that.
You don't believe it's wrong. It needs to be connected. It needs to be connected. They need social connection between them.
That's your statement. You can. I don't buy it. I'm sorry.
Okay, it's up to you. It's up to you. You don't buy it. That's fine. That's all. But you're missing a lot of things. That's what I'm saying. If you don't buy.
I don't buy it. So
okay.
I think your basic premise I don't buy, and I, my job here is to give you input, and my main input is that unless you can show something that is manageable, if you think that you're going to boil the ocean and you want to go sell an investor,
You said that I have to show 100 million users to start the financing. It's
not 100
not right.
million users. I said 1 million users. I didn't say 100 million users.
How about before? No one needs. What's your opinion? I don't need investment before that.
George, I don't think I can help you. Let's just call it quits.
No, I was not hoping you helped me. I was saying that this is the problem which needs to be discussed, and this is the new wave of thinking about connections. It's going to be social networks.
I don't buy into your premise, period. So
I don't buy that
you're not interested in listening.
I don't buy that you can help. I don't buy that you can help at all. I mean, that's fine. I just attending this event. It was interesting. That's it.
Okay, good. So, folks, I would like you to understand one simple thing about fundraising. Investors are trying to go from $0 to $100 million in 5 to 7 years. This is what the main premise of the venture capital industry is. And in doing so, they try to de-risk the beginning as much as possible. So they want to see, they want to see teams that have domain knowledge in whatever domain they're working on. They want to see, if it's a first-time entrepreneur, they want to see validation of the concept people are working on. And and different domains, there are different types of validation metrics that people are looking for. Investors work on different stages of businesses, and there are different validation metrics for different stages. We talked to Laurel Touby earlier. She's a pre-seed investor. Her validation metrics are much more modest than what would be the validation metrics for, a $300 million fund or a $1 billion fund. So people have different requirements, different things that they're willing to invest in. But one thing we see that is universally true is that if you have a very kind of boil the ocean kind of idea, and you cannot show a very clear, simple market penetration strategy with some validation that it is working, it's very unlikely that you would be able to raise money. At least in my network, I will not be able to help you raise money. So and I will say upfront that we are not the only people who can help you raise money. There are lots of people who can help you raise money. Maybe you are a genius and you can raise money by yourself without anybody's help. You're welcome to do whatever you feel like doing. My job here is to tell you from our network what can we do and what we cannot do based on the trends of the industry that we work within. And in that industry, everything I said is true. You cannot raise money. People are not going to write checks unless you show significant validation. People do write checks. If you've been here at these sessions before, you must have met investors through this forum who do concept financing. But they do concept financing either on teams that have very deep domain knowledge and in some technology area that has a very big market, but something very unique. And they also write checks on concepts for repeat entrepreneurs. If you've done it before, you have track record and people know your track record in being able to execute on specific types of technologies, those are the scenarios where people tend to write checks. So that's what we are working with. We work within constraints. We do not have a fund, and we do not have any investors who would be willing to write unconstrained checks on concepts that do not fit some of these criteria. And that's where I'm coming from. As I said up front, you can discard my feedback. There is no problem. I will not be offended. It is your venture. You do exactly whatever you want to do with it. But if you like the way we work here, we try to increase the probability of fundraising by following good strategy. We have developed methodology, and if you're willing to follow that methodology, the chances that we would be able to help you is high. And we help a lot of people. We've been doing this for 11 years, and it's worked. We have a lot of companies that have benefited tremendously through this program. So if you like our approach, and I'm not going to sugarcoat my feedback, I'm going to tell you exactly the way I see it. If you like that approach, very clean, candid approach, please refer 1Mby1M to other entrepreneurs who are looking for help with their ventures. And in terms of resources, you'll find everything at 1Mby1M.com. You'll find a blog series. You'll find the Entrepreneur Journeys book series. There are 12 volumes of that. You can use that to learn. These roundtables happen every week. We're doing the 522nd session today. We have a full acceleration program where we teach the extensive methodology guidance. We have a digital curriculum that you can access from anywhere in the world, including from Tbilisi, Georgia. We help you with business development where our network overlaps with what you're looking for. We make introductions. And we have private sessions like these where we do the strategy consulting, mentoring, coaching, whatever you call it. We do help you with financing. We have a network of over 300 investors who work with us in our portfolio companies. And we have tremendous clout in the media. I suggest you go to the 1Mby1M self-assessment that is available for free on the website, 1Mby1M.com. There you will find the due diligence questions that investors would ask you. I suggest you try to put your idea through those due diligence questions. There are a couple of areas where you go to plug your knowledge gap. One is the bootstrapping course that is on our blog. You'll find it pinned at the top of the blog. It's a free course, about an hour. We strongly recommend you take that as soon as possible. And then as you're going through the self-assessment and looking at issues and areas of strategy where you get stuck, you can go to 1Mby1M Basic. That's our curriculum-only option, and you can plug your knowledge gap. This is at your pace, at your time, on your time. So the website is very rich. We have provided what to expect from premium, basic, FAQs, video FAQs, extensive description of our curriculum. It is a case study-based curriculum. We have tons of case studies of successful entrepreneurs and how they have built their companies. It is a case study-based program. You have the privilege of standing on the shoulders of other people who have done it before. Investor introductions are part of the program. You should go to the investor introduction section on the website and study what is required to be introduced to investors. There is a policy. You should be aware of that. Please do not join the program assuming that we will introduce you to investors right away. We will not. Unless you're ready, we will not introduce you to investors. Our methodology is lean, capital efficient, bootstrap startups. You have to bootstrap first, raise money later in our methodology. That is pretty much it. We have more free roundtables coming. There are 3 more this month. And then I can take more questions and talk to more people. If you have questions about the program, please contact Irina Patterson, irina@1Mby1M.com. Okay, anybody, questions, comments? You can ask questions in the public chat as well. I will pick it up from there. Anybody, questions, comments? Introductions, you're welcome to introduce yourselves as well. It's a good networking time. No one, very quiet group. If no one has a question, I will, oh here, Todorov, do you work with companies based in Europe? It is a global virtual accelerator. We work with companies anywhere in the world. Europe, yes. Timbuktu, yes. Georgia, yes. Everywhere, basically. We're the only global virtual accelerator in the world. Where are you joining from, Todor? What country, what city? Sofia, Bulgaria, okay. And what are you working on? What is your concept or what is your business? Todor is a co-founder of a startup that is a SaaS product in the ad tech industry. It focuses on what we think is the future of editorial and advertorial content on one hand and native and banner ads on the other. Working on this for the last 6 months. We have an MVP, the first clients, and we feel we hit the product market fit. Below is one of the landing pages, I see. Very good. You're welcome to come and pitch, and I will dialogue with you on your business, your strategy, and so forth, and I'll be happy to help you. Anybody else? You're very welcome, Todor. All right, I don't see any other questions or comments, so I will see you next week if you choose to come back. And in the meantime, use the resources on the web and on our website, and there's abundant amount of resources for you to use. Thanks for coming today. Bye.